Hello again. Time to look for the corrective waves according to the Elliott waves principle, and I will use the same chart that I showed you on the impulsive wave, and we'll try to look at this structuring here as the best example for a typical corrective wave. Now, corrective waves in the Elliott waves are the most troubling and difficult to understand price formations. They come in such a complex form, even more on the currency market, because on the currency market, you see, it's not like in the stock exchange market or equities or any other security, as a matter of fact, because the liquidity on the currency market is so high and it is being so news driven, the price, then you have such an extreme moves into one side or the other, and that makes the shapes and the structure of price, the price structure, to be extremely difficult to analyze. It is not uncommon, for example, for a corrective wave to take complex shapes. For example, if you are looking for a zigzag, and the zigzag looks like this, it is the simplest form of a correction is being called a zigzag. So if you are looking for a zigzag, zigzag should look like an A and a B and a C, like this. So this should be named a zigzag A, B, and C. Now remember, corrective waves and corrections are coming in very complicated forms. For example, this is a zigzag, but why this is a zigzag? Because one of the rules of a correction says that a move to the downside that corrects an impulsive move, so this is an impulsive move, and you're looking for a move to the downside. So if you are looking at the B wave in here, if the B wave retraces more than 50% than wave A, then this is not a zigzag, period. But if the B wave it is smaller than 50% retracement out of wave A, then this is a zigzag. And why is this important? Because if this is a zigzag, then the price structure in here, it is being formed out of 5 waves, third waves, and another 5 waves to the downside. So this is the structure of a zigzag, 5, 3, 5. But if you see, for example, that the B wave it is retracing to the upside more than 50% and even 61.8% out of wave A, then you have your clue that this is not a zigzag anymore, but this is being called a flat, and flats are a different category of corrections. Now, if this is called a flat, then the ramifications go even further. What kind of a flat it is? It is a common flat. It is a running flat. It is an irregular flat. It is an elongated flat. So all kinds of possibilities, only judging by this moment, by this wave B. And why is this important, if this is a flat or not? Because if B wave retraces higher than 50%, 61.8% out of wave A, then wave A should have three legs to the downside, not 5, because flats come in the structure 3, 3, 5, not 5, 3, 5, like zigzag does. Now, for example, this is only one example of a zigzag. But actually, what price can do, price can go even further and makes a double zigzag. For example, let's say that this is a zigzag. So you have 5 ways to the downside, corrected with 3 ways, and another 5 ways to the downside, and then the price decides to make a move like this, okay, or like this. However, it is not breaking into new highs, but actually it is coming and makes a new low like this, and makes a structure like this, like an A, and a B, and a C. Now basically this is the same structure that you see in here, still a zigzag, but connected with a wave in here, and this is being called an X wave, and this X wave has the meaning of connecting the 2 zigzags. And all of a sudden you have an ABC, X, and another ABC. So 2 zigzags connected with the next, and this is being called a double zigzag. And of course, in the Elliott wave theory, under the correction category, goes also a triple zigzag. You have another X wave in here, and then another zigzag to the downside. Moreover, on the double corrections or triple corrections, the last zigzag may be replaced with a triangle, a contracted triangle, or the two zigzag can be connected with a flat or with a triangle. So extremely complicated. A lot of things to learn. You have to practice. Have to take a look at charts. Don't despair. Don't be arrogant that you know everything, but because the market is going to come and show you that the market is always right, only because of these corrections. For example, this is the impulsive move that we've taken a look earlier. Now in this case, okay, this is 1, 2, 3, 4, 5 to the upside. So you might say that this is wave A to the downside. At this moment, we don't know if this wave A is formed out of 5 waves or 3 waves. But if you're looking at the B wave that comes and corrects wave A, you are seeing actually that B wave goes higher than 61.8 even retracement of wave A. And from this moment on, we know that this is a flat. If this is a flat, it has a structure of 3, 3, 5. So this would be made out of 3 small waves, wave A for example, and this is a B wave, and this is a C wave, like this, of a lower degree. So A, B, and C. So A, B, C, and you have wave A. Then the B wave, the same structure is something like A, B, C. And then in here you have, because this is a flat you need a structure of 5 subwaves. So probably a 1, 2, 3, 4, and 5 to the downside. And this should be your 5th wave in here, your C wave, sorry, and probably a 2nd wave. Now it depends very much on the amplitude, on the severity of the correction in here. How much it retraces from previous wave, and this is wave 1. How much it retraces? If it goes into the 61.8 and 50% retracement, that it might be a 2nd wave, and you're looking for the 3rd wave to come for an impulse of a higher degree. If it goes, for example, only in the 38.2, 50% area, then it might be a 4th wave type. So you're looking for clues that this consolidation might be a 4th wave type. What I'm trying to say is that, taking into consideration that currency markets actually consolidate more than 65–70% of the time, and only the rest are traveling, then you may see that this is the most important part of the trading of the Elliott waves. So learning these shapes, getting used to what a wave looks like, what a corrections might look like, get familiar with retracements, what are the prerequisites for each move, and you will see that this entire this chapter, this correction chapter, might be only the beginning of an entirely new, complex and different approach regarding analyzing currency markets. With this recording, actually I end the short introduction on the Elliott waves. I strongly recommend for the corrections type to read the book, the Glenn Neely's book and Eric Hall book. It's being called Mastering Elliott Wave. It is applied to the foreign exchange markets, and it is a useful book because all the corrections are being presented, all the rules, what makes an impulse, what makes a correction, what are the proportions to be looked for, what are the rules to be watched, and so on and so forth. So this is one of the best Elliott Waves books out there, and I strongly recommend this one for this chapter. And going forward, we're going to take a look at the Andrews pitchfork. This is this is a useful tool, and you'll see it is quite easy to understand, and I hope you will enjoy that one too. So have a great day and stay safe from the market until next time.